April 15th is one of the most dreaded days of the year, and it's almost here. Brian Moore takes a look at some of the tax mistakes you don't want to make in this Watching Out For You report.
No one wants to pay more than necessary or run the risk of an audit. Here are several common mistakes to avoid. Tax preparers are working long hours these days on tax returns, and they see lots of mistakes. CPA Ellen Rosen says one of the most common errors concerns filing an extension.
The tax is due whether or not you file an extension on April 15th. The extension gives you time to file your return, but the tax dollars are due.
Consumer Reports' Toby Stanger says another big mistake, not filing at all because you can't afford to pay your entire tax bill on tax day.
No matter what, you have to file your tax return. Usually you can set up an installment plan with the Internal Revenue Service and avoid a stiff penalty, but you're still going to have to pay interest.
You can find the forms on irs.gov by typing installment into the search bar. Another mistake, not claiming everything you're allowed. For instance, the federal tax credit for energy efficient upgrades to your home. If you made improvements that qualify, be sure to include those. And here's something regarding your parents you may not know.
If you pay more than 50% of your parents' living expenses, you may be able to claim them as dependents even if they don't live with you.
When it comes to charitable donations, don't assume that a canceled check is enough to prove your generosity.
For charitable contributions of $250 or more, you're going to need a receipt from the organization showing the amount you donated.
And if you claim business deductions like meals, of course, keep the credit card receipt, but you should also know who attended and why. Consumer Reports says that if you do make an error on your tax return, all is not lost. You can always file an amended return to correct that mistake. Back to you.